Breaking right now. The word jihad is back in global headlines tonight. After the U.S. Israeli air campaign that killed Iran's supreme leader Ayatollah Ali Khamenei, senior Iranian clerics are openly calling for jihad against America and Israel. They frame it as holy revenge for Khamenei's death. Just in, one of Iran's most influential ayatollahs, Nasser Makarem Shirazi, has issued a fatwa. He calls it a religious duty for Muslims to avenge Khamenei and eliminate those he blames for the attack. And this is not happening in a vacuum. Weeks earlier, a powerful committee in Iran's parliament warned that any attack on Khamenei would necessitate a declaration of jihad against the attackers. So today's rhetoric is not random anger. It is the scenario hardliners promised if the supreme leader was ever targeted. Stay with me. The implications for oil, gold, crypto, and the dollar are huge. Now here's the key point. This is not a formal declaration of war by the Iranian state, but it is a religious call that can mobilize militias and radicals across the region. According to reports from Tehran and Qom, multiple senior clerics are describing revenge as a religious duty for Muslims worldwide. That language is exactly what groups like Hezbollah, Iraqi militias, and Yemen's Houthis listen to. But something important happens here. Washington is framing this conflict very differently. President Donald Trump has described the strikes on Iran as a campaign for regime change and major combat operations aimed at destroying Iran's military and nuclear infrastructure. He has repeatedly called on the Iranian people to overthrow their government and urged Revolutionary Guard units to surrender. In interviews and briefings, Trump has said the war could last 4 weeks or less, maybe stretching to 4 or 5 weeks to meet U.S. objectives. He insists the goal is to finish the job, not enter an endless quagmire. He sounds confident. Markets hear something else: prolonged uncertainty. Let's step back and quickly map the battlefield. On February 28th, U.S. and Israeli forces launched massive strikes across Iran, hitting missile bases, naval facilities, and nuclear sites such as Natanz. Multiple outlets report thousands of targets hit in the opening wave, with heavy casualties and major damage to Iran's air defenses and command centers. Those strikes killed Ayatollah Ali Khamenei, Iran's supreme leader, in what U.S. officials describe as a high-risk but successful decapitation strike. Iranian leaders call it a declaration of war against Muslims and promise retaliation. Iran has already fired missiles and drones at U.S. and Israeli facilities across the region, including targets in Iraq and the Gulf. Several Iran-aligned militias in Iraq say they will not remain neutral and vow to hit U.S. bases. Analysts warn this is now a regional war, not a limited strike. And that is where the jihad rhetoric amplifies the danger. Because if jihad is framed as a global religious duty, every U.S. embassy, tanker, and base from the Mediterranean to the Indian Ocean becomes a symbolic target. That threat alone can move markets before a single missile is fired. Let's talk about the streets. According to international reporting, anti-U.S. riots and protests have erupted across several Muslim-majority countries after Khamenei's killing. In Pakistan, crowds stormed the outer walls of a U.S. consulate in Karachi. At least 9 protesters were killed when security forces opened fire. Demonstrators also gathered outside U.S. diplomatic sites in Lahore and Islamabad. A UN office in Skardu was set on fire as anger spread. In Iraq, black-clad protesters tried to push into Baghdad's Green Zone, home of the U.S. Embassy. Security forces responded with tear gas and barricades as demonstrators demanded the withdrawal of remaining U.S. troops. Protests do not equal war, but they do signal how far anti-American sentiment can travel when jihad becomes the rallying word. Now, how has Trump responded politically and emotionally? U.S. media describe a president who is doubling down. He has told Americans that major combat operations are underway and that more strikes are coming until Iran's regime is broken or forced to negotiate on U.S. terms. He has warned that more U.S. troops may be needed and openly accepted that American casualties are likely. At the same time, he insists the timeline is short and controllable, again repeating that 4 to 5 week frame. Is he furious? Listen to his own words and tone, promising a big one is still coming and urging Iranians to take over your government when the bombing stops. So, what if Iran's clerics actually mean it when they say jihad? What does that do to the dollar, to oil, to your crypto bag? First, oil. This is the most direct shock. After the first U.S. Israeli strikes, Brent and WTI crude jumped around 7 to 8% in a single session, hitting the highest levels in months. Some intraday spikes were even sharper as traders reacted to reports of damaged tankers and disrupted loadings. Reports from the Gulf suggest that traffic through the Strait of Hormuz, the narrow choke point that carries roughly a fifth of global oil trade, has been severely disrupted. Iranian forces and allied militias have warned commercial ships and claimed attacks on at least 3 tankers transiting near the strait. One analysis estimates oil prices jumped as much as 13% at the peak when news of a de facto Hormuz shutdown hit the tape. Natural gas benchmarks in Europe also spiked, with some contracts reportedly up nearly 50% on the day. OPEC Plus has already moved to slightly increase production quotas in an emergency response, trying to calm markets. But analysts say that if tankers stay at risk or insurance costs explode, no production hike will fully offset a serious shipping disruption. What happens if jihad rhetoric motivates more attacks on Gulf infrastructure, pipelines, LNG terminals, refineries? Several Gulf states hosting U.S. troops have already been hit by Iranian missiles and drones, which analysts say could push them deeper into the anti-Iran coalition. That could widen the war. And with every new explosion near critical energy assets, recession odds for Europe and Asia tick higher. Now, let's turn to gold, because here the reaction has been historic. Spot gold has surged to never-before-seen levels above $5,300 an ounce, with some intraday prints testing around $5,400. Reuters notes that prices jumped more than 1% immediately after Khamenei's killing, extending a rally that had already been fueled by global turmoil and rate cut expectations. Some market commentators describe this as the Iran war premium, on top of existing safe haven flows. Gold is now up dramatically versus a year ago, following a huge 2025 rally and another double-digit gain in early 2026. Investors are piling into bullion ETFs, physical coins, and futures as they watch missiles fly and hear clerics talk about global jihad. Analysts suggest that as long as the conflict threatens shipping lanes and U.S.-Iran escalation, gold's downside will be limited. But here's where it gets interesting. Crypto is not behaving like digital gold. Bitcoin initially plunged on the first headlines of U.S. and Israeli strikes on Iran, dropping towards $60,000 and losing almost 5% within minutes. Then, as traders digested news of Khamenei's death and speculated on potential Federal Reserve easing down the road, BTC bounced back above $68,000. More recent analysis shows Bitcoin stuck in a wide range between roughly $60,000 and $72,000, failing to break higher despite each new escalation. One trading desk notes that Bitcoin has lost its war premium and is trading more like a typical risk asset than a safe haven. So when Iran's clerics shout jihad, gold pops. Bitcoin shrugs, chops sideways, and waits for macro liquidity, not missiles. For altcoins, the picture is even worse. Risk-on tokens are underperforming while capital rotates into cash, treasuries, and large-cap defensive equities. Now here's the key question for your portfolio. Does this jihad rhetoric stay symbolic, or does it translate into a long, grinding insurgency? If the fatwas from Khamenei and statements from Iran's parliament lead to coordinated attacks on U.S. assets, we could see More drone swarms on Gulf oil infrastructure, cyber attacks against Western financial systems, and sustained pressure on shipping through Hormuz and possibly the Red Sea. Analysts quoted by Reuters warn that Iran's strikes on Gulf states could pull them into a broader coalition with Washington, widening the battlefield. That would transform this from a U.S.-Iran showdown into a multi-state regional war with far bigger economic consequences. In that world, oil could spike well beyond current levels, especially if any major producer's capacity is knocked offline for weeks. Central banks would face a brutal trade-off between fighting inflation and backstopping growth. Gold would likely remain the primary hedge, especially for institutions forced to de-risk emerging market exposure. Some analysts even talk about a possible test of $6,000 an ounce if the war drags into summer and shipping lanes remain at risk. Bitcoin's outlook is more uncertain. If the conflict pushes the Fed toward faster easing or wartime fiscal expansion, BTC could benefit indirectly from increased dollar liquidity. But if risk assets sell off hard and regulators target crypto flows related to sanctions evasion, Bitcoin could trade more like high beta tech. In other words, more volatility, not guaranteed protection. Now, what if there is a surprise off-ramp? Trump has already hinted that the U.S. is open to negotiations with Tehran under certain conditions, even while bombing continues. Iranian officials, however, have publicly ruled out talks after Khamenei's death, at least for now. Some analysts suggest that if battlefield realities become too costly, both sides might quietly move toward a ceasefire enforced by regional powers. In that scenario, the jihad rhetoric could gradually cool, protests might fade, and markets would start to price a risk premium unwind. Oil prices would likely retreat from current spikes, though probably not back to pre-war levels immediately. Gold could consolidate, giving back some war gains but holding much of the move, thanks to structural demand and ongoing global uncertainty. Bitcoin might then regain its macro narrative, trading more on rates and ETF flows than on missile headlines. But until that de-escalation appears, traders will keep one eye on charts and one eye on the Persian Gulf. So where does that leave you tonight? We have Iranian clerics declaring jihad and urging revenge for Khamenei's killing. We have President Trump promising to keep hitting Iran for 4 to 5 weeks, pushing for regime change while insisting the war will not drag on forever. We have protests and riots from Pakistan to Iraq, embassies under siege, and U.S. bases on high alert. We have oil surging, shipping threatened, gold exploding to record highs, and Bitcoin struggling to decide whether it is a hedge or just tech beta with a twist. The headlines scream holy war. The markets translate that into higher risk, higher volatility, higher premiums. Could this be the moment the dollar system faces its next real stress test? Could this be the crisis that pushes more countries toward alternative payment rails, gold reserves, maybe even selective use of crypto for sanctions evasion? Those are the big questions we will keep tracking every night. For now, Iranian clerics say jihad. Trump says the bombing will continue until objectives are met. And the markets? They are telling you very clearly, this story is far from over.